Why did my insurance rates go up? Without a doubt, that is the single most common question insurance agents and insurance providers get. And with good reason. It affects your pocket, so you want answers. So in today's video, we're going to dig into that. Let's get after it. Hey folks, Jack Wingate here, and on this channel, we help individuals, families, and businesses with tips, tricks, and strategies to help you save money on your insurance, help you understand insurance a little bit better, and let you know what's going on in the insurance industry. And rate increases are one of the most difficult conversations an insurance agent can have. And guys, let me let you in on a little dirty secret that the insurance industry does not want you to know. Your insurance rates are never going down. It's just not going to happen. Well, caveat, if you have a bad driving record or you have some homeowners insurance claims and the time frame has come where those drop off of your record, then of course your insurance rates could go down. They don't always do, you never know. But insurance rates going up, it's just commonplace. And in fact, in our agency in North Carolina, I always assume that insurance rates are going to go up around 10%, give or take. So most of the time, that's okay with people. They understand the natural inflation of things is just going to happen. Your insurance is going to go up. But there's a more difficult question when rates skyrocket. When they hit that 12, 15, 20% increase, that's when you want answers. And so today, we're going to talk about it. And I'm going to give you the most concise answer that you can hope for. The reason your insurance rates go up is simply because the insurance company is, wait for it, losing money or not making enough money. Guys, it's as simple as that. Insurance companies are a for-profit business. So when they don't make money or they don't make enough money or they lose money, they have to do something to offset that. So that means you, insurance premium paying customer, have to help them out by having your rates go up. But let's dig into it a little bit more than that. Yes, insurance carriers might be losing money. And I can tell you in 2022, insurance carriers, the big boys, lost record amounts of money. So in 2023, what do you think would happen? Of course, insurance rates had to go up. But why did 2022 have such a bad experience? Well, let's dig into that a little bit. All right, so why are insurance companies losing money? Or why do they lose money? It doesn't matter when. Why do insurance companies lose money? Well, in order to go through that, you have to understand where their money is and where their expenses are. And the number one driver of whether or not an insurance company is profitable or not profitable comes with their underwriting performance. And that's insurance jargon for meaning they wrote policies and did those policies have losses higher or lower than they expected. So when you have high losses, underwriting profit turns into an underwriting loss. And that is the main way carriers make money. So bad losses means less profit. So in 2022, we experienced almost an apocalyptic event. We had rising inflation, we had supply chain issues, and those supply chain issues made it to where if you wrecked your car, instead of it taking a week to get fixed, it might take 6 weeks. And in that 6 weeks, the insurance carriers have to pay for rental cars. They have to pay increased prices for the parts to fix those vehicles. So everything about that loss is maybe 50%, 100% more than it was just a year or two ago. So there's no way that they have kept up with their rate in order to take care of those losses. Same thing happens with homes. Everyone knows in 2022 at least that building prices skyrocketed. The price of lumber skyrocketed. So if you had a claim on your home, instead of it costing a normal $5,000, it might cost $7,500, $10,000, who knows? And then the other problem is it's going to take longer to get fixed, which makes it cost even more. So the number one reason that the carriers lost money in 2022 is because their losses were higher than expected. Okay, so if the number one driver of insurance carriers, their profit and loss, the number one driver of that was losses, frequency and severity and all that good stuff, they're losing more money than they're bringing in on underwriting. The second largest comes with their insurance expense. Now, hold on. Maybe you didn't know, insurance companies actually buy insurance too. It's called reinsurance. And over the past many years, you've seen an increase in natural disasters. You've got wildfires in California. You've got hurricanes on the East Coast. You've got tornadoes in the Midwest. All of these natural disasters, coupled with supply chain issues, cause the reinsurers to lose money or not make enough money. And just like the regular insurance carriers penalize you and raise your premiums, reinsurance providers have to raise their insurance. And then, of course, the insurance carrier passes that on to you. So that's the number two way or reason that your insurance costs are going up, is because the insurance company's insurance expenses are going up. Okay, so we've looked at the first two levers that insurance companies can use to have their operations profitable or not. And that's underwriting profitability and expenses, including reinsurance. So now let's look at the third lever. And that's something you might not think about, and that's investment income. And that's just what it sounds like. The insurance carriers, when times are good, make a profit. That profit goes into a pool that they then invest, most of the time in less risky investments than a lot of the banks that have gone under over the years have done. Insurance carriers typically invest in really safe items, but they get really good, safe returns. Well, when you enter an environment where markets are crashing, possible recessions are happening, interest rates are going nuts, it's hard for you to generate any investment income. Just like I assume your investment portfolio has not done well in bad times. The same thing happens with an insurance company. So to talk about a time where maybe investment income was up, but losses were up, the insurance company might not have to go up on their premiums to you because the insurance investment gains might offset the losses that they have. So they kind of all work in conjunction. And that's the final and third lever that insurance companies use. All right, so at this point, you probably know more about the operations of an insurance company than you ever thought you would want to know. And that's okay. Knowledge is power, right? But we've looked at how losses drive carrier profitability. We looked at how increased expenses, including their own insurance, affects profitability. And then finally, how investment income or a lack thereof affects profitability. All that to be said, when you hit the perfect storm like we did in 2022, 2023, where you have increased losses, you have increased expenses, and you have a decrease in investment income, that can mean only one thing, and it's not good news for you and me as insurance consumers. That means our rates are going up. Hey folks, I hope you've gotten something from this video. We have other videos where we give you tips and tricks on how to save money on auto insurance or home insurance or landlord insurance. Make sure to check those out. And until next time, we'll see you.